Today on the Ask BP podcast, we're talking about what is the best way to finance more than 4 properties at a time. Stay tuned.
You're listening to another BiggerPockets Ask BP podcast, where you'll hear short, direct answers to your biggest real estate questions. Submit your question today on Facebook, Twitter, or the BiggerPockets forums by using hashtag AskBP. And don't forget to pick up your copy of The Ultimate Beginner's Guide to Real Estate Investing and other great content when you sign up for your free account at BiggerPockets.com. With that, let's get to the show.
Hey, what is going on, everyone? My name is Brandon, and you are listening and or watching the Ask BP podcast, the show that comes to you every weekday and answers your biggest real estate questions. And today's question came in an email from Danielle from Alpharetta, Georgia. I hope I got that right. Alpharetta, Georgia. And Danielle's question was, how can I finance more than 4 properties? So Danielle, let me try to explain a little bit. Maybe I'll back up for people who aren't sure what you're talking about. Maybe they didn't know you can only finance 4. Let me talk about why that is. First of all, so the way that loans and mortgages work is that there are these buyers who buy up mortgages in bulk from banks. So you go to your local bank, your XYZ bank down the street, and you go get a mortgage. And they give you the cash so that you can pay for the house, and then you owe them money every month. However, think about that. If the bank did that to thousands of customers, they would run out of money very, very quickly. Banks don't have billions of dollars, like small banks don't have billions of dollars. So what they do is they package up these mortgages and they sell them up to big mortgage buyers. Now, the 2 largest mortgage buyers are Fannie Mae, which is the majority, that's the biggest one, and Freddie Mac. So there's Fannie Mae and Freddie Mac. And you have Fannie Mae buys up a lot of them, and in order to sell your loans to Fannie Mae and Freddie Mac, which most banks do, you have to abide by a lot of rules. And one of those rules that Fannie Mae has, which is the largest buyer of mortgages, is no more than 4 properties on your credit report. And so if you're trying to finance more than 4 properties, the bank says no. And a lot of people get stuck and they're buying properties. They buy 1, they buy 2, they buy 3, they buy 4, and then they're stuck and they don't know where to go from there. And they say, well, this is the most I can ever get. I guess I'm done investing. Then they sit down and go and watch their soap operas. But not you, because you're asking this question, Danielle. So you want to learn how to get past this. So let me talk about 5, I think I got 5 different ways you can finance more than 4 properties. So number 1, first way to do it is to go to a bank that sells them up to Freddie Mac. Freddie Mac, the other mortgage buyer, they're kind of both similar because they're both owned by the government now, sort of. They're just weird little government enterprises. But Freddie Mac will actually allow up to 10 mortgages on your credit report versus 4. And so if you go to a lender who does Freddie Mac loans, you can usually get up to 10 loans on your credit report before they start saying no. So that's one thing to keep in mind. You can go to a bank that will allow that. So that's the first way. The second way you can get more than 4 financed is through a portfolio lender. So a portfolio lender is a lender just like a local bank, XYZ bank, but rather than selling their loans up to Fannie Mae, Freddie Mac, or whoever's buying them, they keep them in-house. And because of that, they don't have to fit the square person in the square box or whatever, like they have a little bit of flexibility in what they can do. And so what they do is they look at the whole picture, who you are, what kind of, risk are you going to be to them? And then if they like what they see, they can lend you and they can not have to abide by those 4 or 10 or whatever limits. So a portfolio lender can be a good way to finance more than 4 properties. I've used them on a number of occasions. In fact, I don't think I've used a traditional bank, not a portfolio lender, in a number of years now, just because they all say no to me because I got more than 4 loans. So I typically just go to the portfolio lenders in my area and talk to them, and that works out pretty good. So portfolio lenders is number 2. Number 3 would be commercial lenders. And so this is where a lot of investors, once they hit that 4 mark or the 10 mark, they say, you know what, I'm done with residential, I'm moving on up. And then they start doing commercial properties. And so they can go and they get 5 plexes, 10 plexes, 20 plexes. Now, those aren't sold the same way. They don't have the same rule requirement as the single family houses or the 1, 2, 3, and 4 unit properties do. So the commercial lenders can do a lot more what they want. In fact, some commercial lenders even will allow you to finance a residential property as a commercial loan. It's just usually not as good interest rates, usually a lower term or lesser term. but you can still do it that way. And I know a lot of investors who do that. They buy rental properties, just single family houses. They just use the commercial loan department at the bank and they're able to do that. Just again, keep in mind there's shorter terms, higher payments, a little bit higher interest rate, some things you got to deal with. So just keep that in mind as well. So that's number 1, number 2, and number 3. Number 4 you could consider is seller financing. That is where the actual owner of the property, if they own it free and clear, the owner of the property will finance the deal for you. And so that's how I financed my 24-unit apartment complex, where the seller wanted to sell. They didn't want to have to manage it and take care of the property anymore, but they still wanted to receive income for their retirement. And so they sold it to me with almost no money down I was 24, 25 years old at the time. They sold it to me because I was energetic. I was enthusiastic. I loved real estate. I was a hustler. I like to think I still am in this game. And so like they saw that I could take care of it in a way that they didn't want to. And so they sold it with seller financing. Instead of me paying a bank, I paid them every single month. And so I'm a big fan of seller financing. In fact, I think seller financing is probably one of the best methods going forward over the next 10 years. We're going to see a lot of value in seller financing. Why? Because the baby boomer generation who owns all these properties are getting ready to retire. They want to go golf. They want to go down to Arizona or New Mexico for the winter. They don't want to sit there and be stuck with their 4-plex or their 10-plex or whatever. And so if you can create a win-win situation with them where you buy the properties and you pay them as the bank, then they're still getting their retirement money, but they don't have to work for it anymore. It truly can be a win-win situation. And finally, number 5, the 5th way that I would consider financing more than 4 properties is through a partner. And so there's a lot of different ways you can structure partnerships. But for example, you could use a partner who comes in and they provide the mortgage. So they get the mortgage in their name, but both of you are on title. That's one way to handle it. And so that way you're on their 4-unit limit, not your own. And maybe you split at 50-50 from that point on. Maybe they supply the down payment and the mortgage, and you bring the deal and the management. You know, I've done that a number of times where I've worked with partners who they bring the down payment and they bring the ability to get a mortgage. And I just bring a really great deal. And I say, hey, I've got this deal. I can't finance it myself. Do you want to go 50-50 on it? You know, like you bring the mortgage and the money. I'll put my own work into it. And at the end of the day, anything we make, we'll split 50-50. And that has worked out really well for me as well. So there's just a few ways that you can finance properties more than 4. So hopefully that helps you. Those are 5 ways to finance more than 4 properties. So before we get out of here though, let's cover today's success quote of the day, which is Jim Rohn, who said, if you don't design your own life plan, chances are you'll fall into someone else's plan. And guess what they have planned for you? Not much. I love that. It kind of goes with what I always say is, you know, I want to help people build their own future, not spend their time or waste their time building somebody else's. I mean, that's one of my goals in life, is to help as many people as I can start building their own wealth and their own future instead of building their boss's future. So hopefully that helps you guys today. Hopefully that Ask BP episode was insightful. If you have not yet given me a thumbs up on this video, if you're watching this on YouTube, I just want to recommend, give me a quick thumbs up. Let me know that you like this video. Leave a comment below, whether you're watching on YouTube, whether you're listening on iTunes, wherever you're experiencing this Ask BP episode, just leave us a comment or a rating, review. All that stuff helps more people discover the show. So with that, let's get out of here. Remember, though, in pursuit of your goals, don't just learn, but get out there and take action. For the Ask BP podcast, my name is Brandon, signing off.
You've just heard another episode of the BiggerPockets Ask BP podcast. Submit your question today on Facebook, Twitter, or the BiggerPockets forum by using hashtag AskBP. And for more incredible real estate investing tools and education, including a free download of our book, The Ultimate Beginner's Guide to Real Estate Investing, head over to BiggerPockets.com and sign up for your free account today. We'll see you on the next show.